The housing market is going through another rough patch. Whether you're thinking about buying or selling a home, the trends you're about to see, they should be useful. And if you're an investor just on the sidelines, this research should also come in handy. Now, there's a lot of housing data out there, and it's tough to sort through it all, but I've done a lot of that legwork for you. Looking at and understanding just a few key indicators, it can really help you make better decisions. I've been following the housing market for over a decade. It's been a wild ride to say the least. And now there's another big shift underway. For quick prediction takeaways, I don't see home prices dropping at least a lot anytime soon. Although it's still a unique housing crisis for the average buyer. This is based largely on decreasing affordability thanks to increasing interest rates and lower home supply. So let's go ahead and jump into the data, and if you find my research useful, I'd really appreciate it if you just tap that like button down below because that helps out my YouTube channel. And thank you to all of my subscribers for sticking around. I really appreciate the feedback as well. Now, to see the big changes underway, we're going to have to start with the building blocks, or interest rates. This isn't as exciting, but as you're about to see, little changes, they have a huge impact. For example, the average 30-year fixed mortgage rate, it hit a low back at the start of last year at 2.65%. This is the lowest it's been in modern history, and it's crazy to think you could lock into such a low rate for 30 years. But over the past year, it's climbed up to 4.42%. As you can see in the chart, the mortgage rate is close to the highest it's been in the past 10 years. And thanks to inflation and signaling from the Fed, it's likely going higher. But for a better current perspective, let's take a look at how a jump from 2.65% to 4.42%, how that impacts mortgage payments. And to start, we need to look at average home prices. So as you can see in this next chart, the recent median sales price for a home in the US is $408,000. For comparison, I've also included the average sales price. It comes in even higher at $477,000. The long-term trend, it's up, of course. Homes over the long term continue to gain value, at least relative to US dollars. And in most places across the US, home values have soared over the past year. And looking back just a little ways, home values are up close to 60% from their highs before the 2008-2009 housing collapse. With that past housing crisis in recent memory, higher home prices today are crazy to consider. Although it is really important to note that home prices today they're still on a much better foundation. So getting back to the average mortgage payments, and for simplicity, let's go ahead and just use $400,000 for the loan for a 30-year mortgage. Now I'm ignoring down payments and some other smaller factors. Nonetheless, this will show important changes in the housing market. Based on the low 2.65% rate last year, the monthly mortgage payment, it would come in at $1,612. But now based on the more recent 4.42% rate, the monthly mortgage payment, it comes in at $1,961. That's an increase of $349 a month. And over the course of the year, that amounts to paying $4,187 more. And over the course of the full 30 years, home buyers pay an extra $125,600 in interest. These huge payment differences all come from 2.65% climbing to 4.42%. As you can see, the small interest rate changes, they have a huge impact over time, and this makes homes much less affordable. As interest rates climb, it puts downward pressure on home buying demand. And as mentioned, the Fed, it's likely going to continue pushing up interest rates to try and counter rising inflation. So this is already putting downward pressure on the housing market, and it's one of the most important pieces to the housing crisis in 2022. On top of that, with home prices higher today, indirect costs climb as well, such as property insurance, taxes, etc. Although these price increases, they can be a bit delayed. It's just unfortunate that many home buyers forget to consider those. The housing crisis in 2022, it really falls on most home buyers today. Unlike the past collapse, we won't likely see a big decrease in home values, for at least one big reason, which I'm about to get to. And this is barring a severe recession, which the probability of a recession has climbed. So even with decreased home buying demand due to higher prices and higher interest rates, it's offset by a housing supply shortage. This is really helping push home prices higher. Now, after the 2008-09 housing crisis, new home starts dropped to their lowest levels in over 50 years. Less homes are being built or have been built recently. Now, construction, it has picked up over the past decade, although the underinvestment has led to a huge housing shortage. And all the while, the US population, it's continued to climb. And also, more millennials are looking to buy their starter homes. Some estimates put the US home shortage around 3 to 4 million homes. That's huge. And it won't likely be fixed anytime soon. Also, some supply chain issues are also causing some short-term stress, but I hope a lot of that's alleviated over the next year. So all this, it really boils down to a housing crisis for home buyers. The rest of 2022 is only going to get worse for housing affordability. We won't likely see another big jump in home prices, but increasing interest rates make monthly mortgage payments much less affordable. Now, if you're on the other side of the equation, you already own a home, you've locked into a mortgage, or you're looking to sell, you're in a much better spot. Ultimately, for the average American, a home is the most expensive asset that they'll own. So it's vital to do your due diligence before buying or selling. And understanding a few key factors and trends, it can help you make better decisions. Personally, I'm not likely buying a house anytime soon. It's not because I haven't saved up enough, but it's more of an opportunity cost. I'm investing my money elsewhere, and when it comes to buying a house down the road, I'm hoping to be able to put in an all-cash offer. Although, depending on where interest rates are at that time, taking out a mortgage, it still might make more sense. I shared a video a while back on why I invest in stocks over real estate. Feel free to check that out, and I've linked to it in the description below. Also, if you want to see when, where, and why I'm investing, feel free to subscribe to my YouTube channel. And once again, I'd really appreciate it if you just tap that like button down below. Thanks for stopping by.